So today we're going to do an update on Sofi stock after it dropped yesterday. There was a big hit piece put out on Sofi by a short seller, or potentially a short seller, but it was definitely a hit piece, and today I'm going to call that out because I think it was really unfair on the stock, and we've actually seen this happen before. And even if you're not a Sofi shareholder, it's actually quite good to look into some of these hit pieces that sometimes happen. I was supposed to talk about a brand new stock I was buying today, but we'll probably have to move that one to tomorrow now. But let's get started on this Sofi short seller attack today. So we are closing to around 17,000 subscribers on the YouTube channel, so if you're not subscribed, go do it for me please, and if we do get there, I'll do a live Q&A session for you guys when we do get to the 17,000 subscribers. But getting on to Sofi stock, so yeah, a bit of a whack yesterday, down 8%. It was definitely underperforming the market yesterday, a bit of a bad start to the year, but let's put it into context. I mean, it's not been a bad year, has it? If you zoom out a little bit and go a year out, it's still up 70% in the last year, which has been a pretty good performer. I think for me, I'm still up around about 120% on Sofi, which is something I'm still very happy with those gains that we have on Sofi, and I still think the stock has a lot of potential to do really well. I think that probably the timing of the hit piece is probably key, because we've been on a very good run up, and we've gone to, I wouldn't say extended valuations, but things maybe a little bit stretched, people looking to maybe take a bit of profit off the table. So I think that was a really good timing from this hit piece and this short seller. So I'm going to show you this. Sofi stock downgraded by KBW, warns shares could drop 20%. Now, you would think that this was yesterday's article. It's not. This is from January the 3rd, 2024. So basically, exactly a year ago, the same company that put the hit piece out yesterday on Sofi did the same exact thing 1 year ago, and they basically said the shares could drop. They said that they are trading at a premium, and they said that the stock would underperform, and they lowered their share price target to $6.50. So yeah, this was a year ago, and I remember at the start of the year, I don't know if it's still on the stock chart, I think it might have just gone off a little bit. At the start of the year, the stock took a little bit of a drop when this hit piece kind of came out. And the company that did the hit piece yesterday did the exact same thing 1 year ago. Now, obviously, they said the shares could drop 20%. Which obviously did not happen. The stock went on to do a very good year. If we take out the drop yesterday, the stock was actually up 88% from that time. So it certainly did not underperform the market. And the $6.50 share price looked a little bit silly, and they definitely executed very well on the guidance. And this is just a prime example of, like, this company that did this hit piece yesterday did the exact same thing 1 year ago, and look how wrong they were. If you listen to that hit piece, obviously you would have missed out on a really good return from Sofi. Now let's fast forward to 2025. So we had another hit piece, and once again it came from the exact same company, KBW, which if we go back to where we were a year ago, KBW again, the exact same time they did another hit piece. So they said that it was a long and difficult path ahead. They said that they have, once again, put the rating on underperform. We know how that happened last time. And it did raise its price target, but it raised its price target to $8 from $7. Now, basically, the reason why they went from this time is that they would struggle to hit the guidance that's currently laid out for the business. They think they won't potentially hit the guidance that management is saying. Now, this is once again showing you that what a load of crap. Because if we look at Sofi is probably one of the stocks that has executed the best in the last few years that I own. From the last, not even just the last quarter, but the last kind of 2 or 3 years, this company has overachieved. They have once again set out their estimates, their guidance, and they beat it, and then they hike it up, which is what you want to see. And it's Q after Q that this is happening. If we go in the last quarter, for example, you can see here once again the management hiked up the guidance. This management team under Anthony Noto is a very good management team where they sandbag the guidance and then they overachieve it. They've done it for many years now, which is what you want to see. So this is just, it frustrates me, because it is such a lie that they've put in that statement there. The also other important thing to kind of point out is that Sofi have been doing this in a macro environment that they claim to be the worst one ever. We've had the rise in interest rates, for example. So the actual catalyst for Sofi in the next kind of couple of years is probably pretty good, and they actually put it even on their hit piece as well, that I think that SoFi is actually going into more of a favourable environment where interest rates are going to be lower and the company should do very well. But yet they still have the audacity to say that SoFi will not be able to hit the targets even though they're going into more of a favourable environment. It just doesn't make sense. And you look at what the guidance is for SoFi next year, we're expected the EPS once again to go up and then upgrade by double, which would be really good. And once again, we see them overachieve. That could be even higher. You look at what they delivered last year, which was 0.12. I think at the start of the year, I think it was like 0.04. Revenue guidance wise, they're expected to do 23% this year. I think last year they were expected to do 18% at the start of the year, so major upgrades. This year, 17% on the revenue growth. Once again, if we're going to in a major improving environment for SoFi, I don't see why the revenue would slow down. I think that as the year goes on, we'll see SoFi once again hike up those numbers and will go on to do very well. Now, I guess kind of thing is, why is this company doing this kind of hit piece? Why have they done it last year? Why have they done it this year? And the thing is that either there's some secret short position going on that hasn't been revealed, or also you got to look at what they invest in. A lot of this, what they invest in is banks, but they invest in legacy banks like JP Morgan, Morgan Stanley, Goldman Sachs. There's no SoFi holding. So from this business here, what they're probably seeing is they are maybe protecting the clients. Maybe the clients have asked the likes of JP Morgan, and don't be surprised that this goes on, but it does. They might go, can you just do a little bit of a hit piece on SoFi? And also the thing is that SoFi at the moment is taking market share. People going to SoFi, that's clearing the financials. You know, you've seen the growth in profit and revenue. Clients, especially the younger generation, are using SoFi a lot more over the legacy banks. So what we're seeing at the moment is these legacy banks struggling. So either from a point of view, from KBW's point of view, they're thinking we need to protect our investments, so we do a hit piece on them. That's the only thing we can do. Or even there's been a little bit of a nudge from some of these investment banks that have gone, hey, you know, you've got a big stake in us, look after us. You know, we can't really do anything against SoFi apart from try and damage their reputation. And if we do these hit pieces like this, and it goes out in the media, oh look, SoFi stock is dipping 20%, 30%. Oh, maybe I shouldn't be shopping with SoFi because the business is doing poorly. Or, well, not the business is doing poorly, financially it's doing amazing, but the share price has gone down. And we know before, like, share price affects people's moods around stock. It could be absolutely financially doing absolutely amazing, but if that share price drops 30%, all of a sudden you see the fear, you see the people say, oh, it's a trash stock because the share price is down. People ignore the financials. So that's maybe something what's going on in the background. There's definitely a motive there. I don't know what the motive is, because what they're saying is a load of rubbish. We saw it be a load of rubbish last year when they did the hit piece. We saw it once again with a load of rubbish this year on this kind of hit piece, and saying they won't hit expectations when it's a business that has exceeded the expectations for the last kind of 3 or 4 years since it's been a public company. So a little bit frustrating. It's a little bit frustrating once again as well that the market listens to this sort of rubbish. You know, why has the market not recognised that a year ago they did a hit piece? Once again, it's a hit piece and the information is very poor on this hit piece, but yet the market still sent the stock down 8%. It is frustrating why the market is listening to any rubbish like this, because as the market listened to it in 2024, the people that sold got punished on it. Maybe it's just a combination of factors. Like I said, I think the timing's really good as well. You know, the stock is up, and maybe it was a kind of push to get a couple of people to sell that maybe were like, oh, do I sell, do I not? And then see it go 8% down, and then that's the trigger to go, actually, you know what, yeah, I'm going to take the profit off the table. That fear kind of kicks in. That's maybe why. So probably a very good timing from it, but it's frustrating and it is what it is. You know, let's just think about where it was a year ago. The same people that did the same hit piece and said it was going to underperform the market. We saw how it worked out for them last year. So that once again, you ignore you ignore some of these media, some of these analysts, some of these investment banks out there. It's really bad advice, and hopefully you don't listen to it. From my point of view, obviously someone that's up on this stock, 120%. What's my thoughts on SoFi now? Well, I'll show you some quick numbers to finish on a bit of a positive note. Yeah, I have updated my numbers once again. I've kind of shown you these numbers since the stock was, $6. I apologise. It says the last time I had to quickly update these numbers because last time I did this, the stock was actually $7. So I've not updated the stock price, but I have updated the market cap, which is now 15 billion compared to when I last did this, which was like 6 or 7 billion, which is crazy. So 15 billion market cap now. I've updated the numbers a little bit, so I've shortened the guidance a little bit. So I've gone 13, 15, 20% revenue growth. I think there'll be somewhere in there for the next kind of 5 years. I apologise, I've not updated the years either. Profit margin of 15, 18, 20%. I used to be a little bit lower on the profit margin. My profit margin was 10%, but they're already basically there now. So it makes sense that I think as they'll have more margin expansion as the revenue growth keeps scaling now. So I think they will be higher than 10% profit margin in 5 years' time. So I've upgraded that a little bit to 15, 18, 20%. I think they could even maybe overachieve them numbers, to be fair. And I put about 30 times earnings in. So right now the company is 80 times earnings. On a forward basis, 50 times earnings, which I don't actually think is terrible for a company with this sort of growth. I definitely wouldn't say it's undervalued either, so probably important to work that out. And I've put a multiple of 30 times earnings in because I think that's about fair. I think it's more than a market average company because it's got so much growth going on. I think it'll trade at a bit of a premium. And you can see here there's still a little bit of upside here in the stock, 50% upside, nearly 100% upside. So yeah, I'm still pretty much holding the stock at the moment. Now obviously the upside's a little bit more limited from when I did it at like $7 because the upside that was showing there was incredible. So I'm every so often kind of like trimming a little bit of profit off the table, but I'm certainly keeping the majority of my longer term holding in the stock because I still think there's a pretty decent upside here. The only thing that would probably see it more successful than what I'm kind of forecasting is if the market wants, the market's thrown it right now up to like an 80 times multiple. I don't like going straight for the 80 times multiples because I think it's a bit frothy to assume an 80 times multiple. But let's just say, for example, it does hold on to an 80 times multiple for the next kind of 5 years. If that was to happen, then there is mega upside still in the stock, as you can see here. That would be incredible returns for the next few years. So if it was to have that big multiple expansion still, it would still do very, very well from here. And there's, these are a little bit of me thinking, is it going to go to more than a 30 times earnings business? Can it go 40, 50, 60, 70? And there will be mega upside if that happens. And that's why I'm holding the majority of them in stock. But even if I look at my base case scenario, I still think there's still decent upside here. So that's why I'm still holding the majority of my my shares at the moment, because I do think Sofi still has plenty of upside even at the share price it's at right now. Obviously not as good opportunity when I was building the main position out at like $6-7, but still I'm definitely a big believer in Sofi for the next kind of 5 years. So yeah, that's the video on Sofi, guys. Hopefully you haven't listened to some of this fear or this hit piece article that was put out there, and hopefully you Sofi shareholders that have done very well in the last year continue to have much success as well in the coming years as well, and it does not underperform the market like the hit piece from KBW says. So hope you enjoyed it. Hit the like button if you're not here, subscribe. See you in a bit.